What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are looking at an updated view of the current housing market. Now, there are plenty of people out there who have a lot more real estate than I do, who have a lot larger YouTube channels than I do, and have access to some more specific data and in-depth information than I do. And so what I wanted to do for you today is conglomerate what a lot of these people are saying, because number one, a lot of real estate investing experts disagree on what is going to happen soon. Number two, a lot of the information that is out there on what is currently happening in real estate and therefore what might happen soon is data heavy. And when watching some of these videos or reading some of these articles, you can kind of come away with, glass eyes, just, it's a little bit of information overload because they're focusing too much on the individual data sets and not pulling back to look at the broad picture overall and what that means for the average real estate investor. And number three, almost none of these people are coming at it from the perspective of how money really works. A lot of them are coming at it from the perspective of, hey, this is just what the the think tanks say. This is what the talking heads say. This is what the individual data points look like. Or they're looking at it from the perspective of, hey, this is what my entire portfolio looks like. And so therefore it's a little bit more anecdotal. And so today in this video, I'm pooling all of that together for you to give you the eagle eye view. What does the data say right now? What does it look like? And what can you expect from the housing market going forward? Let's dive in. All right, before we start, number one, as always, I have all of the relevant links in the description below if you'd like to dive in to any of the things that I'm talking about, because I'm going to be talking about some information that, channels like Meet Kevin or Ken McElroy or Graham Stephan or Valuetainment, Patrick Bet David, I'm going to be looking at and talking about some of the things that all of them have talked about recently. So if you want to go and watch some of those videos where they kind of look at some more of the specific data points more in depth, feel free. There's some great videos that I've got down in the description below. Second thing to note is that I'm not really going to do the same thing as them, because otherwise you should just go watch their videos. I'm kind of conglomerating all of that together for you. All right, the first thing to note is that housing prices are exploding. Across the country, housing prices are going up. On average, they're the highest they've ever been. Now, who is this good for? Number one, it's good for anybody who wants to take equity out of a property they already have. Number two, it's good for anybody who wants to sell a property and maybe already has somewhere else to live. Because if you're just selling the house that you live in and you're going to go buy another property instead, you're selling something at a higher price, but you're buying something else at a higher price. So maybe that doesn't do you as much good as you'd think. So who is this bad for? It's obviously going to be bad for anybody looking to buy a house because they have to pay higher prices. And some people are saying that it's bad for anybody who does own real estate because this is signaling the top of the real estate market. Now, there are a few reasons that are driving prices of houses higher. Number one, and most importantly, is interest rates. When interest rates go down, that pushes housing prices up. Why? Why does that push housing prices up? Well, it's very simple. Number one, it means mortgage payments get smaller, because a giant portion of your mortgage payment is going to be from your interest payment. And so if the overall interest rates go down, that means the mortgage interest rates go down. So if the interest rates on a mortgage are smaller, that means the house payment will be smaller because the interest portion will be smaller. Therefore, if you could afford a house 6 months ago when interest rates were higher, you can afford the same payment now, which would mean that the house price goes higher. And so you see this correlation for decades where, when interest rates go up or down, housing prices do the opposite. Now, it's worth noting that usually, especially over the last 20 years or so, when interest rates go up, they do so very slowly and only when the economy looks strong. And when interest rates go down, they do so in order to prevent or absorb a shock of some crisis. So obviously that has some influence on those data points. But broadly speaking, if interest rates go down, that's going to push housing prices up. Another thing that's pushing housing prices up, which is related to the interest rates, is the higher demand relative to the supply. So prices are always going to be a result of the relationship between supply and demand. And just because of COVID, the recent crisis that we've been in, there are a lot fewer houses being put onto the market. There's the inventory is what they say, or the total supply of houses is not near as high as it normally is. And so anybody that wants to buy a house, you're seeing things like bidding wars happen. And this is especially true when you look at the areas where populations are moving into versus the places where populations are moving out of. So like just in like California, we've got a lot of people leaving California, especially cities like San Francisco. People are leaving very quickly. And so you're not seeing the same, pop in real estate prices in cities like that, or, New York City or Chicago. And you are seeing a lot more rise in prices in the cities where people are flocking into. Again, supply and demand. There's more people wanting to buy a limited or lower supply of housing. Now, even further than that, the current supply issue is not completely a function of what has been happening over the last couple of months with the coronavirus. We've had a supply issue for years in the United States, and it's been building. The number of new houses being built and new apartments being built in our nation overall for years has not been anywhere near what it needs to be to keep pace with the number of people that's growing that will need to be able to buy new homes to live in. So in essence, housing prices are going up. Now, there's a lot of talk about how, yes, that's happening right now, but that means that we're turning the corner into a housing crash that will be similar to, what happened in 2008, 2009, where we're going to see housing prices just absolutely plummet. Now, one of the reasons given for a prediction that we're going to see a housing market crash where the prices of houses go down significantly across the country is the current economic crisis that we're in. We've got millions unemployed. We've got, something like 50% of small businesses on Yelp have reported closing down. We've got millions of people on unemployment. We've got millions of people that are delinquent on their mortgage payments or in forbearance plans. We've got millions of people who, without the current ban on evictions due to non-payment of rent, would already be evicted. And so people are saying, you put these couple of pieces together and it's kind of inevitable that as soon as some of these things play out, we're going to start to have a big crash in real estate. Now, as with anything, this requires a little bit of nuance. Number one, everybody still needs a place to live. Now, true, you can always have downsizing, and that's why on this channel I've always recommended buying and investing in real estate that are in the lower income neighborhoods versus the higher income neighborhoods, because when people downsize and try and save money on real estate, you could do that all across the board. So the lower the income neighborhood is, the higher chance that it stays rented. If you bought a mansion that you're trying to rent out, you're probably going to have a hard time renting that during a crisis. But people always have to have a place to live. Number two, like we talked about before, for years we've had a building supply issue. And so even if people move in together, there's still not enough supply overall in the nation to currently meet the demand. And so even if that demand subsides a little bit, that's not going to do much. And number three, we don't have the data to show, what people are doing with the money that they're not having to pay since they're in forbearance right now. Most people who can are in forbearance, and that's whether they have a job. There's no requirements on just saying, hey, I'd like to not pay my mortgage for the next 3 months or 6 months or 12 months. You don't have to prove any, loss of job or loss of income or anything like that. You basically, with your lender, just have to check a box that says, I've been affected by COVID. I'd like to stop paying my mortgage payments for now. Now, there are certainly some people who that's absolutely necessary for, or else they, wouldn't be able to make ends meet, and they're struggling to get by right now. And it's certainly true as well that there are some people doing that are using those months in order to save up a big emergency fund, buy gold, buy stocks. Now, I mentioned we currently have an eviction ban due to a non-payment of rent. And so there are a lot of people saying, hey, as soon as we get around that corner, when evictions for non-payment of rent are allowed again, we're going to have a mass wave of evictions. Well, number one, these people, again, they still have to go live somewhere. And just like with mortgages, there are a lot of people not paying their rent right now just because they know they can't get evicted from it, and they will be able to continue to live where they're living once the eviction ban ends, because they'll just back pay everything and they won't get evicted. Now, of the people, let's say that they all do get evicted, some of those landlords are going to have to sell their house. Maybe they're underwater, maybe they're in a position where they can't keep on paying for a property, maintenance expensive, turnover, maybe they're done with their mortgage forbearance, they can't afford all their expenses. without having renters in there who have the ability to just not pay the rent if they don't want to. So we could definitely see a supply increase from that. But again, going back to before, we currently have a supply shortage. That's one of the reasons driving housing prices higher. Now, currently we are waiting for Congress to pass the new stimulus bill, and it looks like there's going to be both a new 12-month ban on evictions nationwide from this bill, which is unprecedented, but also there will be money included in this bill for rent relief, and that will go to both set aside for both renters and for landlords who are hurting as a result of this. And so if that gets passed in the current position that it looks like it's in, then we don't have an eviction crisis anymore. We're not going to have people getting evicted because you're going to have basically the government is going to be paying the bills that the renters cannot pay themselves. And so if that happens, now all of a sudden we have a ton of new money coming in that's going to be paying the rent for the renters, and so the renters are going to be able to continue to do what they were needing to do beforehand, to try and make ends meet, to try and get by. You're going to have landlords making their incomes again, and for any of those landlords who are not currently in forbearance, maybe that's their income that they need to pay the mortgage, or maybe there's tons of landlords out there that just have a small portfolio of properties that provides enough income for them to live off of. The houses are paid off, and so the forbearance option doesn't help them, and so they'll start to get their income again from this bill, even if they can't evict their current tenants for non-payment of rent. Now, if you've noticed here, there's kind of a man behind the curtain, if you will. There's a lot of focus on all the data points on how many people are in forbearance, how many people are delinquent, how many renters are not paying their rent, how many could be evicted, how many businesses are closing down, how many people are, on unemployment who can't pay their bills, what kinds of people are qualifying for the new mortgages for the houses, whether it's going to subprime borrowers or really qualified borrowers, who's buying the new houses versus not buying the new houses. But if you pull back a little bit, the one guy that nobody's talking about in this current housing crisis, in the current housing market, you guessed it, it's the Fed. Who is controlling the interest rates to be low that are making the housing prices go up? Who is the one who is buying all of the mortgages that are packaged up together? This still happens today. Mortgages are, issued to people. The people borrow the money to buy the house. That mortgage is packaged up together with tons of other mortgages by the bank, and then they sell all of those mortgages as a package. Who is the one buying those? The Fed. So the banks aren't keeping these mortgages on their balance sheet. Those are all going to the Fed. Who is the one who is going to lend newly created dollars to the federal government to give them the funds in order to spend the extra $2 trillion on this new stimulus package that's going to go to renters and landlords to prevent evictions from happening? The Fed. And what do all of these actions do? What are they what is their base action? Money printing. So the Federal Reserve's expansion of the total money supply, and either using that to purchase mortgage-backed securities, using that to keep interest rates low, using that to loan indirectly through the banks to the federal government to allow them to spend more than they're bringing in from taxes or bringing in from borrowing from the open market through the Treasury issuance. It's the Federal Reserve. Their monetary expansion, their printing new money, is directly influencing a lot of things, but in this case, the housing market in a way that's driving prices and keeping prices higher. Now, add into that the fact that we have a ton of regulations that are preventing new housing from being built, whether it's local or federal. Even things as small scale as zoning laws make it a lot harder for companies to build housing profitably, or whether it's the new laws that are being proposed about eviction moratoriums. All of this new regulation is being funded, and then the markets that would break as a result of that are being subsidized by the Federal Reserve. And so knowing this whole framework of everything that's going on and viewing it in light of the reality of kind of what is the original source, the Federal Reserve being the source of causing all these things to happen later on down the chain, understanding the full macro view of what's happening, here's what it looks like the most likely scenario is going forward for probably the next year with housing. Number one, cash flow stays really good and responds to inflation. So if you're a fix and flipper, or you're investing for capital appreciation, you're probably not going to do that well over the next year. But if you're investing in real estate for cash flow, it's probably going to be fantastic for you, because there's there's a lot of money influencing government decisions from real estate. And so it still doesn't look like there's any way that the government is going to pass laws that are initially going to crush the real estate market. Long term, absolutely. The long term unintended consequences of this, sure. I'm talking about the next year or so. If we do see a ban on evictions, there is going to be money that is going directly to renters and landlords to compensate for that. We already saw interest rates go to zero, which means mortgage rates are at 2.86% or something like that right now, which is pushing prices of houses higher. And so as a landlord, as a homeowner, many people have refinanced all of their properties. Many people have done cash out refinances, so they get a little bit of equity that they can pull out of their house to take advantage of the higher prices. And as the supply continues to be constrained, that means more and more people are looking for a place to live, and there's not enough places to live that are compensating for that, which means that the prices of rents will stay high and are continuing to go higher. And so from a cash flow perspective, it still looks like real estate is going to be fantastic, especially over the next year. And as inflation ticks up higher, we already know that the Federal Reserve is not going to do anything about interest rates until inflation gets out of control. They already said no matter what happens, we want inflation to be a lot higher, and we're not going to touch interest rates. And so even if inflation is going to be a lot higher than the official statistics show, because it always is, but even if the official statistics show inflation going 3, 4, 5, 6%, the Federal Reserve has already said, hey, we're not going to touch interest rates, which means we're not going to see, a crash in housing prices prompted by a spike in interest rates. Now, it is true that the Federal Reserve doesn't directly control mortgage rates, and so you could see the market kind of snap and break and the Federal Reserve lose control of things like mortgage rates. But if that happens, what you'll likely see is a nationalization, complete nationalization of mortgages, and you'll see mortgages being pegged at a specific interest rate, 2.5 to 1.5, 1% through legal means funded by the Federal Reserve. Now, I don't know if this will happen within the next year, but I fully expect something like this to happen within at least the next couple of years, where the mortgage interest rates are pegged at a lower rate than they're at right now by law, which would prompt another, what we're seeing right now, more refinancing, more purchasing, housing prices being pushed up because rates are going lower. There's still not being enough supply because America doesn't make anything right now, even houses, especially houses. And so we're going to see another, squeeze on the supply where people are rushing to buy because it's so cheap to borrow and there's not enough houses to do that with. And so number one, like I said, cash flow, fantastic. Number two, housing prices, no matter what happens, it looks like housing prices will at least stay where they are nationally across the board and probably continue to edge up higher unless you're in one of these cities where everybody's leaving. Demographics make a huge deal. So you'll see spikes in areas where everybody's moving to, and you'll see drops in areas where everybody's leaving. And then lastly, and this is most important, is that we need to pay attention to real purchasing power, the real value of the dollar in comparison to what these things are doing. Because the cash flow that you're getting from your properties is probably going to keep pace with inflation. It's not going to make you richer, but it will continue. If it goes up, that means your cost of living is going to go up as well. And so if you're collecting, 15 grand a month from your rental properties right now, and maybe in 6 months you've been able to bump up your rents, and you're collecting 20 grand a month, if your cost of living was 15 grand a month, your cost of living probably went up to 20 grand as well. And so from a real perspective, from real purchasing power perspective, your cash flow from your properties will keep pace with inflation, but it's not going to outgrow it. Now, what about housing prices? I fully expect housing prices to stay the same or continue to go up a little bit higher, especially if we move full on banana republic, nationalize the mortgage industry completely 100%, peg interest rates, all the way down at 1%. Housing prices will go up, but they won't keep pace with inflation. What that means is that if you've got a property that's worth $500,000 right now, that $500,000 represents maybe, 6 years of living expenses for you. And then let's say in 1 year, that same property is worth $1 million, just as an extreme example. It probably won't represent 6 years of living expenses for you anymore. Living expenses are probably going to outpace the housing market on average across the states. Maybe in your certain area, if you're getting a big surge, it will outpace the general cost of living for you. But across the board, it looks like the cost of living is rising faster than the overall level of housing prices nationwide. Because if you remember from the beginning of the video, the main driver, the original source that's pushing all this from happening to be happening is the Federal Reserve, and it's their money printing, and it's their monetizing the debt from the federal government, and it's their mortgage-backed security purchases, and it's their keeping interest rates low. And yes, that is continuing to push asset prices higher, like houses and stocks, but overall it makes people poorer. And so when looking at it from the perspective of how much stuff can I buy with this, and how long can I live with this money, what's the purchasing power of these dollars, you'll probably see the number of dollars go up, but the amount of stuff you can buy with that go down when you're talking about housing prices. And then with cash flow, it'll keep pace and stay the same. As always, I will keep you updated as things unfold, as new laws change, as new things are announced. And if my outlook changes on real estate, again, I will definitely let you know. If you're looking to buy a rental property, especially if you live in an area where you don't want to buy it near you, if you want to look out of state, or if you're looking to sell a rental property, even if you already have a renter in it, my favorite resource is roofstock.com. Use my link in the description below to sign up for a free account to see what kind of inventory they're selling and to see what the process looks like if you want to sell your property through Roofstock. As always, I really appreciate it if you liked the video. Hit that like button for the YouTube algorithms. You guys are the best. Have a great day.